The concept of buying unpopular large companies and its execution on a group basis, as described above, are both quite simple. But in considering individual companies, a special factor of opposite import must sometimes be taken into account. Companies that are inherently speculative because of widely varying earnings tend to sell both at a relatively high price and at a relatively low multiplier in their good years, and conversely at low prices and high multipliers in their bad years. These relationships are illustrated in Table 7-3, covering fluctuations of Chrysler Corp. Common. In these cases, the market has sufficient skepticism as to the continuation of the unusually high profits to value them conservatively, and conversely, when earnings are low or non-existent. Note that by the arithmetic, if a company earns next to nothing, its shares must sell at a high multiplier of these minuscule profits. As it happens, Chrysler has been quite exceptional in the DJIA list of leading companies, and hence it did not greatly affect the low multiplier calculations. It would be quite easy to avoid inclusion of such anomalous issues in a low multiplier list by requiring also that the price be low in relation to past average earnings or by some similar test. While writing this revision, we tested the results of the DJIA low multiplier method applied to a group assumed to be bought at